Trading and investing in financial markets involves risk. Please do your own research and never trade with money you can't afford to lose. Good morning, traders, and welcome to Expert Trader UK's Daily Market Pulse. Today is Wednesday, November 19th, 2025. Wall Street closed lower overnight as the S&P 500 logged a fourth straight decline, with tech and AI leaders under valuation pressure. The Dow fell about 1.07%, S&P 500 0.83%, and Nasdaq 1.21% heading into today's session. Asia opened mixed to softer as nerves ahead of Nvidia's earnings weighed on sentiment. Regional bourses wobbled with focus on whether AI momentum can stabilize risk appetite. After a $1.6 trillion global rout, markets are attempting to stabilize, but breadth remains weak with many constituents below key moving averages. Traders await a catalyst from megacap earnings and U.S. data. Bitcoin rebounded after briefly slipping below 90,000 to trade near the low 90,000s, marking a roughly 30% drawdown from October's record. Extreme fear indicators flash in the near term. The pullback has erased year-to-date gains for BTC, with momentum skewed lower. A death cross recently registered, keeping near-term risks elevated despite tactical bounce attempts. Sentiment remains fragile as liquidity conditions and broader risk-off in momentum assets weigh on crypto. Traders are eyeing whether macro catalysts or AI equity stabilization can steady flows. The dollar firmed into midweek, reflecting cautious risk tone and pre-event positioning, while major pairs remain sensitive to U.S. policy signals. EUR/USD technicals reflect choppy two-way trade after recent rebounds, with traders watching support and resistance bands closely amid mixed global cues. Asia FX breadth is subdued as investors await Nvidia's print and U.S. releases, sustaining a defensive bid in USD on dips. Gold edged lower as the dollar firmed, with traders awaiting the Federal Reserve's latest minutes and delayed U.S. data for macro guidance. Dips continue to attract medium-term hedging interest. Central bank demand remains a constructive backdrop for bullion, with ongoing reserve diversification cited as a multi-year trend. Energy and broader commodity risk is tethered to global growth sentiment and policy expectations, with volatility tracking equity risk-off episodes. The Fed has shifted to an easing bias with prior cuts this fall and markets parsing minutes and upcoming data to calibrate odds for another reduction in December. The ECB is on hold with inflation near target, while the BOE remains steady, and the BOJ maintains its gradualist stance. Divergence keeps FX cross-currents elevated. Policy path uncertainty and delayed U.S. releases keep event risk high, contributing to defensive positioning across assets into key prints. Nvidia earnings are the single biggest risk event for AI sentiment and broader equity tone. Guidance on Blackwell demand and capex cycles is pivotal for risk appetite. U.S. minutes and catch-up economic releases may sway rate cut odds, impacting USD, yields, and gold. Ongoing crypto volatility around the 90,000 to 95,000 band for BTC could spill into risk proxies and related equities. Nvidia. High conviction buy stance into earnings from top analysts, with focus on Blackwell orders and hyperscaler demand. A beat guide could re-risk AI and the broader tape. Daily best stocks to buy now selections continue to flag strong buy names backed by top analysts. Look for fresh updates emphasizing high-quality growth and near-term catalysts. Recent top stocks screens highlight unanimous or near-unanimous strong buys. Price targets imply meaningful upside. Prioritize names with robust revisions and earnings events this week. This video is for informational purposes only and is not financial advice. All research and market analysis provided by Expert Trader UK. If you found this update helpful, please like and subscribe for more daily market insights.